Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Welcome back, ladies and gentlemen, to another episode. Today, we got a huge update for XRP investors, something quietly moving behind the scenes that most retail investors are missing. Institutions are making big moves while retail is reacting emotionally. If you've been watching the market and feeling uneasy, this episode will give you the bigger picture. We're going to break down how the Grayscale and Franklin Templeton XRP ETFs are impacting supply, what institutional versus retail behavior is telling us, historical parallels that give us perspective, how Raoul Pal's macro insight help explain current market dynamics. Grab a drink, get comfortable, and let's break it down. Here's the breaking news headline. Two major institutional players, Grayscale and Franklin Templeton, are launching XRP spot ETFs on the New York Stock Exchange. Grayscale $40 billion in assets under management, Franklin Templeton $1.5 trillion in assets under management. To put this in context, Bitwise went live with $5 billion. Canary Capital started with $200 million. Now we're seeing hundreds of millions of XRP moving off exchanges and OTC desks in a matter of days, ladies and gentlemen. Canary Capital, 146 million XRP removed. Bitwise, 59 million XRP removed. That's a total of 205 million XRP in just 7 trading days. Check this out. This isn't a supply shock. It's a slow drip that's setting the stage for a long-term growth. Let's look at institutional versus retail behavior. Here's the thing. Retail panics during pullbacks, and that's normal. Institutions, they act differently. They accumulate quietly. They focus on long-term positioning. They understand macro liquidity cycles. For example, while retail sold during last week's drip, Franklin Templeton and Grayscale quietly increased holdings. Think back to history. Amazon.com crash. Retail panicked. Institutions quietly bought. Tesla 2018 correction. Institutions accumulation during volatility. Apple 2000 to 2002. Tech winter. Long-term adoption while price fluctuated. Institutions see the infrastructure value. Retail reacts to the price. And this is exactly what we're seeing with XRP today. Let's look at some historical analogies. Let's connect history to XRP. Amazon analogy. Amazon fell 95% during the dot-com crash. Everyone called it dead. Institutions accumulated quietly. And 10 years later, everyone said obvious, of course. While XRP, the network infrastructure, is like Amazon's early fulfillment network. Adoption builds quietly, then explodes. Railroads, 1800s. Railroad stocks crashed repeatedly as the U.S. expanded west. The underlying infrastructure was inevitable. XRP adoption is similar. It's foundational financial infrastructure. Gold repricing, 1971 to 1980. Gold had violent pullbacks after Nixon ended the gold standard. Institutions accumulated because the story was bigger than short-term volatility. XRP is experiencing the same long-term accumulation pattern. Short-term volatility, long-term infrastructure growth. Ladies and gentlemen, let's look at macro cycle and liquidity cycles. Raoul Pal has emphasized that major bull markets don't move in straight lines. Pullbacks of 30-35% are normal. Retail screams it's over. During these dips, institutions use this as an opportunity. As Paul says, you'll be absolutely convinced it's over, but it won't be over. Check this out. This explains why institutions aren't panicking. The liquidity cycle extends to 2026, meaning these pullbacks are expected, not catastrophic. Nothing here is financial advice. This is macro commentary, but it explains institutional positioning versus retail behavior. Here's the XRP long-term thesis. So why are institutions focusing on XRP, you might ask, ladies and gentlemen? Because XRP is built for scale, settlement, and efficiency, not speculation, folks. Near instant settlement, predictable costs, high throughput and reliability, cross-border interoperability. Ripple has been strategically acquiring companies and integrating them into XRP Ledger. Hidden roads, G Treasury. These acquisitions funnel adoption directly into the XRP ecosystem. Slow, deliberate, long-term growth. Here's the key. ETFs and institutional accumulation reduce supply now, setting up for future demand. Think of it like slowly draining a reservoir. When demand surges, the impact is exponential. Let's talk about Bitcoin Black Swan and style contrast. Contrast this with Bitcoin. Bitcoin is often seen as digital gold, but it has vulnerabilities. Mining, centralization, quantum computing risks, fee sustainability concerns. Van Eck has publicly said they could walk away if Bitcoin's fundamental thesis breaks. XRP, by contrast, is a utility settlement network, less energy intensive, more adaptability to cross-border flows. It's not about competing, folks. It's about having a functional infrastructure layer while Bitcoin plays the store of value. Here's the takeaway. Retail panics. Institution accumulates. ETFs are removing supply gradually. Historical analogies and Paul's macro insights confirm pullbacks are normal. XRP adoption ecosystem growth remains the long-term story. If you found value in this episode, hit the like button, subscribe, ring the bell, turn on notifications, drop a comment with ready for a follow-up deep dive. Institutional moves, macro cycles, and network adoption are quietly setting the stage for what comes next. And this story is far from over. This content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who was positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button. Ring the bell. Leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends, shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.